Business Morning. Today we're focusing on the Petroleum Industry Bill, which is yet to be passed into law. Now, in February this year, a technical committee was set up by the Ministry of Petroleum Resources to finalize and come up with a new version of the bill, as there were reports that several versions were flying around, as it were. Well, these and others are some of the issues we'll be looking at today on Business Morning, and I'm being joined now by Judge Etomi, an oil and gas lawyer. He's also the pioneer chairman section on business law of the Nigerian Bar Association. Thank you, George, for being here.
Thank you.
Now, this is not a new issue. We've been here, back and forth. The PIB is something we have discussed extensively several times on Business Morning. But we're back here again. So, why the food dragon?
Well, it shows you the groundbreaking nature of the PIB. It's so fundamental to everything we do. Let's not forget that oil and gas is the mainstay of this economy. And what the PIB is proposing to do is to introduce a regime where a lot of the observed lapses would be corrected legislatively, as it were, so that in theory we can have a more efficient industry. That's what it is designed to achieve. And naturally that means there will be a lot of shifts in balances. People will win some other people would lose. So it's the vested interests. And these vested interests start with the federal government itself, the IOCs, as we all know, and even some of the state governments, especially the oil-producing state governments. They are the ones who are jostling, as it were, for position, so that the new regime, as it were, favors them. So this is the politicking that's going on, and it's high stakes.
So it's basically the contents of the bill.
It's always the content. The principle of a law governing the sector is very welcome, because hitherto, before then, if you're looking for anything in our petroleum laws, you go into so many different scattered regulations, legislations, and so many different things. This bill seeks to consolidate the entire industry in one document that we can all easily refer to. So that's laudable. There's absolutely no doubt about that. Similar to the way the Companies and Allied Matters Act governs the activities of companies. You go to one legislation, you find it. Telecoms is governed by the Telecoms Act. So we need something for the petroleum industry. So there's absolutely no question about that. Now, the issue would then be, how do you realign the existing forces with the current reality on the ground? Now, in terms of what we suffer in the delay, clearly there is hardly any new investment taking place in the sector today as we speak. And if you understand the way the oil and gas industry works, you need a lead time. At times it takes you up to 5-6 years from when you get a license to explore to when you begin to work the field, at times even longer. And if no new investment is being made since this bill was proposed, it already tells you that we are behind as a nation. And then don't forget that oil and gas is being discovered in neighboring countries as we speak. Ghana, the Jubilee fields has come on stream. Sierra Leone, Liberia, Angola is producing as much as we do. So whilst we, as it were, foot drag with our industry, there are strides being made in other places. It's the way you should look at the PIB is, what should the thrust of the bill be? And my suggestion would be that the principles which made the telecom sector function should be imported to the petroleum industry. And that's a simple separation of the policy-making framework, which should be left with the minister, and the regulations, which should be left with the regulator. What we have today is an all-pervading powers given to the minister to regulate the sector. Naturally, that would create conflicts. The NNPC continues to remain the honeypot for the country, and so there would be general reluctance. Nobody willingly loses bar. So you would find those conflicts coming in. But for the wider interests of the country, I think it's important that we understand that the sector, like every other sector, is a commercial enterprise. And if we don't create the enabling environment, new investments will all come in.
Now, George, sorry, let me comment here. Now, I know it's perhaps easier said than done, but at the same time, it's really not rocket science.
Sure.
But you've said that, of course, vested interests, the Ministry of Petroleum, everybody wants to put their interests forward. So I'm thinking, perhaps, have they consulted the services of consultants, as it were? Because if everybody's trying to put their interests forward,
naturally,
can there be consultants, somebody who's on the on the outside, somebody who's also an expert in that field or something, to help align up everybody's interests, and then create a middle ground where everybody can meet and we can perhaps have a win-win situation as well.
This is, in fact, I think what the current minister has done now by getting the team she's put together to look at these conflicting interests. Before this time, the reason you had several versions was that as the interests became more and more pronounced, people were throwing in things. And so the National Assembly itself was then left with a situation where it had about 4 bills, and they didn't know which then was the executive bill to deal with. So the minister is doing the right thing now, getting a crack team together to look at this contending interests, because this is, at the end of the day, it's a negotiation that's taking place. The IOCs are saying that the current bill contains fiscal provisions that do not give them an incentive to invest in industry, and we can't work the industry in this manner. So look at what you are providing for. The government has an interest in ensuring that things like gas flaring end. Some are policy decisions you take. We don't want gases to be flared. We don't want gases to be flared. We want associated gas to be domesticated so that you have domestic use. Because currently all the gas we produce is being exported. So we've had this export mentality with the oil and gas from time. So no infrastructure was provided for the development of gas. So the government, in its for the wider interest of Nigerians, wants to see a structure, a domestic infrastructure developed for the gas to be utilized from within. But to do that, in the absence of you owning the technology, you need somebody who has the technology. You need to create that incentive. And the IOCs are saying, if you give us incentives, we will rework our mechanism and provide the infrastructure. But you can't just make a policy pronouncement, stop gas flaring by X year, and then you think it will happen. Let us know what's in it for us. So what's going on is horse trading, and that's the way it should be. It's just that we spend so much time from when this bill was initially proposed till now.
You said that's the way it should be. Fine, perhaps
yes,
but
you're negotiating.
3 years, 4 years down the line, other countries have done it, as it were.
It's wrong that we have dwelt for too long on this. But
if there's one group of people who know or who should know how very much important this passing this bill is the policymakers themselves. Yeah. I mean, there's all this talk about additional revenue generation into the country. Sure. We have a deficit. We're trying to fund huge infrastructure projects. Sure. We're looking at other areas where we can save and bring in more money. Sure. This alone on its own can bring in billions or if not trillions of naira, if properly.
No, clearly, I mean, old habits die hard. Those who have sat on this goose don't want to let it go easily. So you must find a way of shifting them so that common sense, good sense prevails. Clearly, the way forward is to ensure that we have this clear separation, like you have with the communications industry. I keep going back to that, is that the minister is in charge of policy. The minister sets out the policy, the vision for the industry every so often, and the regulator, the NCC, drives that dream. And once that regime, because it's the legal and regulatory regime that determines whether investors will come in. If they see a viable legal and regulatory regime, they will come in. But if they see what we have now, a miasma of confusion, then everybody holds back. And this is what's going on. But we can't afford to continue to stay back when everybody else is moving forward. BG recently, they are divesting from Nigeria because they have oil fields in Brazil. And the simple question they ask themselves is, do we need to hang around in this sort of uncertain environment? It speaks volumes. If we had a strong domestic input to oil production, that would have been different, like we have in Malaysia and even Brazil itself. But we don't. Of the 2.5 million barrels produced, perhaps not up to 5% is produced by, let me say, the local players in the industry. So for as long as we have that sort of weakened position, we must be realistic when we're looking at our expectations. So curb the appetite, let those who can work the industry come work the industry, and then have a good tax regime that creates the sort of incentives that will make people come work, and then you get your taxes, like the government is doing with telecoms. They're making more money from the industry today, now that they don't have control of the industry in terms of its commercial content, than when Nitel was the sole provider of telecoms services. So we shouldn't be afraid to take big decisions. Take the decision.
Well, so you see this as perhaps for the government, what, unfamiliar territory, as it were?
Yeah, concerns, fears. Some of the state governments, for example, they have worries. You are creating new agencies to look at future explorations. NNPC becomes a limited liability company. Part of the equity are the gas reserves. So when you come down to the practical issues, who gets onto the board? Shouldn't it be those of us who produce the oil? Those sort of jostlings are going on as we speak, and they should be listened to. But then in the end, what is right for the country is what should take place. Otherwise, we'll continue to have this spectacle where NNPC remains generally unaccountable for what they do, and we saw that recently with the subsidy situation. That is what's going to continue if we don't arrest the drift.
Now, I want to believe that while all the consultations and negotiations are going on, lawyers are also part of this this whole mix. You're an oil and gas lawyer, so let's look at the role of the lawyers in this issue. Perhaps even the NBA, maybe they could even step in and, because I know you also sit down, look at the papers.
Sure.
What are your thoughts on that?
I must very proudly say that the bill was first actually unveiled at one of our conferences when I was chairman of a section on business law, and then the special advisor to the president at the time said, such a two-third audience would be the right place to unveil it. So we've had extensive look at it, and we also made a submission to the National Assembly, which mainly our thrust was, please separate policy from regulation so that we can have professionals move the industry forward. Yes, I believe everybody who has an interest will engage the right set of lawyers to look at it, because at the end of the day, what all these discussions will be reduced to clauses in the bill, and you want to make sure that those clauses adequately reflect the mindset of all those who have an interest, and that is what I expect the lawyers to do.
Now, obviously, I want to believe that you've seen parts of it. You said the first one was presented at one of your conferences. So, looking at it, would you say that you fully understand all the intricate details, perhaps what's causing some of the contentions and all of that?
Clearly.
And you know which way this thing can be presented or put in such a way that all parties involved, including the international oil companies themselves, will be satisfied as well?
Well, like with every negotiations, you don't get everything you want, but you get what makes commercial sense to you.
So what is deemed fair, as it were?
Yeah, but what is deemed fair again is also subjective, exactly. But what is clearly from the point of view of those who are investing, you want to make sure that there are no sentiments here when it comes to investing. You want to make sure that you have a fair commercial return for your investment. It's a risk you are taking. You can explore and not find oil. What happens? Then for the government itself, you also want to move away from old habits, the habits where you are just simply a landlord sitting there and collecting rents, and you're not accounting for it, and this rent is coming so frequently. We see what's going on every month. Everybody rushes to Abuja to collect this salary, as it were. There is no incentive to work. Now, this bill makes you get into play as a commercial, so that you too have an interest. So there's an element of curbing of that appetite, which must also take place from the government level. And I'm sure at the end of this exercise, we'll get something viable and move the industry forward. And we must do so in the overall national interest, because as we mentioned, everybody else is now beginning to produce. And once there are options available for those who can work in the industry, they will go to where they are best wanted.
Now, you said that, like you said, the more we delay, the other neighboring countries who are also discovering oil, Ghana is a good example, those who are also putting their acts in order. But aren't there also concerns about the fact that some other nations, especially in the developed economies, are actually investing in alternative sources of energy?
Yeah.
There might come a day when our crude oil will no longer be, in demand, as it were.
Sure. This has always been the fear of many of us from the oil-producing areas. It's such a fungible asset. It's such it's a disappearing asset. So it's not as if it's been replaced. So you're absolutely correct. We must move away from a regime where our dependence on this product is almost 90%. It's simply not workable in the long term. And we can see it when oil prices collapse, and we've seen it in this country. We go practically begging. That was when our borrowing hit the roof. So we must look at the future and look at alternative sources ourselves, notwithstanding the fact that we produce. The United States produces oil. Britain produces oil.
And they have very large strategic reserves also.
And they also have large strategic reserves. We don't even have reserves that can take us for more than 30 days. That's simply not on. When even the Middle Eastern states are beginning to get into the game, they're looking for alternative sources. Same thing with the Asian countries. Brazil, we are the only member of OPEC that's almost totally dependent on this product. And this is not because we don't have intelligent manpower here. We do. But we have not allowed the stated policies to fully take effect. Otherwise, some of the brightest people that have turned around the Malaysian petroleum industry were actually Nigerian petroleum engineers.
Okay, Judge, hold your thoughts for us. We need to take a break at this point. We'll come back and we'll continue with our discussion. I've been talking to Judge Etome. He's an oil and gas lawyer, and we have been looking at the petroleum industry, or the petroleum industry bill, if you will, and some of the pertinent issues, why the bill is still being delayed, and all the other issues surrounding it. We'll take another quick break now, and we'll be right back. You're still watching Business Morning, and Judge Etome is still here with us. He's an oil and gas lawyer, and we're looking at the petroleum industry bill. Thank you so much, Judge, for staying here with us. Now, let's look beyond the petroleum industry bill.
Sure.
Oh, okay. Before we even go there, you said that negotiations are going on, and it looks like we might be having or making some headway, finally, as it were. Can we see it, or should we see it happening this year? We're in this beginning of the first quarter. Yeah. This has been dragging on for years now. Yeah. But that's what we heard last year and the year before.
We should see it this year, because I see there is greater determination on the part of government to make it happen, because they are the ones who can really make it happen.
How has that been measured? Because I heard the same statements last year also. I talked to a couple of analysts, and everybody kept saying, "No, this time government is more determined." What is it that they're doing differently now? It's that's significant and visible, as it were.
Well, I'll tell you that I must confess that part of the pressure was the riots that took place following the petroleum subsidy removal, or whatever happened. And no sensitive government sits back and hopes that things will happen if they don't make a positive move. And so what you're saying is situations where you address the fundamentals in the industry. And not passing this bill was recognized as one of the drawbacks. So it's even in their own interest. So it's not as if it's not in their interest for this to happen. That's why I think it will happen this time. The personnel that's looking at it are also very competent and results-oriented, so it will happen. The IOCs themselves are hurting. It's not as if they're not hurting. They're hurting from, right now, I can tell you, perhaps apart from ExxonMobil, most of all the others, their leases have expired. Nobody likes to operate in this sort of an uncertain environment. You can't raise capital because nobody's sure if you own what you claim you own. You're working on trusts, and that is not good for business in the sense that nobody lends on trust. They lend on visible and viable assets on the ground. So it's in everybody's interest to make this work, and I'm sure the concessions that are required to make this work will be given. So and besides, I'm an optimistic.
You're an optimist, well, obviously.
Yes.
The passage of this bill, no doubt, will mean a full deregulation, as it were, of the petroleum industry. Now we all remember what happened at the beginning of this year when we had a partial deregulation. People hit the streets, protests for several days. What are we to expect? Are we going to see something similar? Would there be mass resistance?
No. I don't expect that would be. We're actually talking at a more esoteric level. When you're looking at the petroleum rover, that hits the man immediately. You're looking at fundamental changes to how the industry works. And this can only portend good for every one of us. So I don't expect that there will be negative reaction to the bill being passed. On the contrary, what you'll be expecting will be positive outcomes. More local players will get into the industry following the Nigerian Content Development Act. That's already in play. So the necessary incentives will be created. You'll have limited liability companies. The NNPC itself will cease to exist in the form in which we know it. It will become a limited liability company. The IJVs, the independent joint ventures that are contemplated, would also come into play, and they will go out to the market like everybody else to raise funds.
So what immediate impact would we see? Is it that what immediate impact
we will not see? No, if you're looking at an immediate impact in the sense of petroleum prices coming down and go, no, that's not going to happen and everything. But you will see a fundamental shift in the way the industry works, and that would be palpable for everyone to notice. And that's what I think is the greatest benefit in ensuring that there is a law, because that certainty creates business activities. So once I begin to work under the PIB, I get access to funding, local and international funding. Don't forget the ancillary businesses. Local banks and local banks, international banks. They will support you, because now everybody knows clearly what the law allows you to do and what the law doesn't allow you to do. And there will be more Nigerian players, because currently one of the things that saddens me most is that we've not been able to take control of this industry, and that's largely been because of the old system allows for patronages. So even in the good old days where we used to go for, as a young lawyer, I used to attend when I applied for quotas for clients, I used to attend interviews where you defended what you wanted. But today what we see is all manner of people coming into Nigeria under one guise or the other. So hopefully it will not totally eliminate it. It would curb it and get more serious Nigerian players. The real losers would be the intermediaries. Those who have speculated with industry over the time will be the real losers. And really, between me and you, it's not a loss to the country.
So how many more players, or how many in terms of the local players coming into the field? Well, how many should we be looking at in terms of investment? How much would we be seeing in terms of revenue? Because I'm told that every month we lose billions of, not even naira, dollars. So how much are we looking at in terms of, because I expect that there might be some kind of explosion, as it were, in terms of
the explosion will come, but it will take a few years because, again, it's an industry that has a gestation period. Like a woman can give birth, except you go through the 9-month cycle. But once you lay the seeds, then you expect that by X period. So, for my money, once the industry, the bill becomes law, and all that's expected begin to happen, give it another 5 years. 5-6 years, we'll begin to see the real benefit. There will be a beehive of activities. It will lead to mass employment and good quality employment, not just employment for the sake of it. Then there will be the ancillary businesses, again similar to the telecoms industry. The ancillary businesses, your recharge card business, and so many of the things that hang around the petroleum industry, welding, so much of this will come on stream. There will be training opportunities for Nigerians, and so many. There will be a beehive of activities, and honestly speaking, it will provide the fulcrum upon which so many other sectors, like the power sector, because part of the gas you require.
Yes, I was going to come to that.
Yes, part of the gas you require.
Now all this is based on, we're hoping that, while all of this is going on, you said 5 years, perhaps the power sector will be carried along at that point. And if things
we don't have to wait for 5 years. 5 years for the power sector to be carried along. Remember, some reform is going on as we speak. So, and part of the target of that reform is to make gas available for the power sector. But in the long term, it will be something we'll just put behind us. We won't even bother to discuss it because it will be a given.
In terms of output, would we see any impact on output in terms of our oil output? Does that affect that in any way?
Sure.
We're currently about 2.3 million, 2.2, 2.3 at the moment.
Yeah, sure. I mean, we have some of the largest reserves still, both in oil and gas terms and everything. And if you have more players coming, naturally the outputs will be there. And the technology is becoming more and more refined. So for less movement, as it were, you'll get far more yield on the field. So that's also a positive for us. Then gas production, the refining process, the liquefaction process is also a lot simpler than it used to be. So there's so much benefit going on. The only thing is that we just need to tap into that benefit, and the delay is what's sort of kept every one of us on hold.
Now, in terms of expanding the industry, as it were, can't we also, just like some other developing countries or developed nations are doing, expand and look into other sources of energy, as it were, not just the oil and gas? No, we're still far behind in that. We ought to have done that in a way before now, but unfortunately that's where we still are. Yeah. But in terms of alternative sources of energy, can we also look at that?
But ironically, there's a program. The federal government has a program for developing alternative sources, including nuclear energy. That's
we can have wind,
many
solar,
people don't even know. Yes,
there's a wind. Cars,
yes, yeah, there are programs like that going on, but they need to be pushed, because the system of patronage, as I told you, has sort of dulled the genius in everybody to come out. All you need to do is have the connections and you make a lot of money. But if you are forced to think, then you look at alternative sources. But yes, we need alternative sources, and I think they will come.
So from now, 5 years down the line, 10 years down the line, what kind of shape would our petroleum industry have taken? Looking down for you, what do you see?
Yeah, my projection is that we will see this sort of movement that we've seen in Malaysia and Brazil, where the local industry essentially competed very favorably with the IOCs, to the point where a lot of the remnants, as it were, the IOCs left behind, were picked up by the industry, reworked for national growth. And that's really been the strength of Petronas and Petrobras. So those should be our models going forward, and that's what I see. Again, I come back to what we're familiar with the telecoms industry. Nobody thinks anymore about whether you can get a line or not. You are more concerned about the quality of the service. We need to get to the point where nobody worries about the cost of petroleum, or whether petrol will be available, or who plays in the market, to whether or not we can actually advance like the rest of the world is doing. Malaysia, for example, depends now from a high of almost 80% dependence on petroleum. It's down to less than 40% because they're developing other industries. We need to do that because
so
the byproduct of
do that as
the byproduct of crude oil is huge. Refining, the byproduct. In fact, there is actually more money to be made from the byproduct of crude oil than the crude itself. Once it's refined, the petrochemical industry will boom. That's what I foresee going. So,
do you also foresee perhaps new refineries working and a situation where we don't have to take crude oil out? No.
The issue of the refineries, it's yes, it should work. The only thing we need to understand is that if you give your crude oil at current prices, yes, you'll get refineries, but it will not necessarily lead to lower pump prices. So we must decide whether you're going to give crude oil plus cost to attract lower prices for domestic use. That's a policy decision. I'll leave it to the policymakers.
Okay, certainly. But thank you so much, George Atome. We have to leave it there
You're
at
welcome.
This time. Thank you for being on the program. I have been talking to George Atome, an oil and gas lawyer, and we have been looking at the petroleum sector, particularly the Petroleum Industry Bill, which hopefully we will see being passed before the end of the year. We'll take another short break and we'll be right back. Welcome back to Business Morning. Nigeria's money markets resumed yesterday from the Easter holiday, and the cost of lending among banks dropped significantly. Let's take a look at the numbers at the interbank market. Call money, that's short-term lending, fell over 2%, down to 13.4%. And for the secured open buyback rates, rates shed about 2%, also closing at a 12% average. And the Naira rallied against the dollar at the interbank foreign exchange market, closing at 157 Naira 50 kobo to the greenback. Now, the forex market has been relatively stable since the beginning of the year. In the first quarter, the market recorded a drop in forex supply from the Central Bank of Nigeria. The Apex Bank sold about $5.3 billion in Q1. That's first quarter, down about 44% compared to what it sold in the last quarter of 2011. That was about $9.54 billion US dollars. That was at the year ended 31st of December. So we're saying the Naira being holding steady against the dollar especially in the last couple of weeks. And still with the market, there's been a delay in the sharing of revenue to the 3 tiers of government. According to reports, there's a shortfall in the National Treasury, and the NNPC is said to be responsible for that. The company is yet to remit all earnings for the month of March. Now, consequently, the scheduled meeting for the Federal Accounts and Allocation Committee, that's the body that shares revenues to the 3 tiers of government the third week of every month, that has been postponed to the 19th and 20th of this month from the initial date of 12th and 13th of April. According to them, this is to give the NNPC enough time to fund the Treasury. Let's take a look at the Treasury market. So we have some maturing Treasury bills coming into the market tomorrow that will provide more liquidity, and we expect that to impact on rates, bringing rates down. At the primary market auction, we're expecting about 18 billion naira for the 91-day money at the rate of 15% to mature tomorrow. 182-day cash worth about 34 billion naira at the rate of 7.7%, and the 364-day cash worth about 50 billion naira sold at the rate of 10.9%. That would come into the market, tomorrow. And also at the open market operations, we're expecting some maturing bills tomorrow. The 261-day money worth about 10.6 billion naira, given at the rate of 8.5%, and the 252-day money given the rate of 35.5 billion naira at 8.6%. So that's over 110 billion naira coming into the system tomorrow. That would impact on rates and bring rates down. We're also expecting cash to flow out into foreign exchange purchases this week from the central bank. Today, the central bank should hold its foreign exchange auction to the market, so more liquidity will be drained out of the market. And of course, some treasury bill auctions also, that is also expected to drain some cash from the system. But on the other hand, we're having some more liquidity coming into the market. While the money markets are fully open right now, trading continues. Let's go over to our earnings board. Well, this time, earnings forecast. We've had a raft of full year 2011 earnings. We're still expecting some more, actually, that are yet to come out. But we're also having Q2 earnings forecast. That's what some companies expect to make by the end of the second quarter. That's from April up until May or June this year. Now this one is from Unity Bank. It's Q2 earnings forecast. According to the bank, it expects to make about 11.36 billion naira, a profit before tax of 1.9 billion naira, and a profit after tax of 1.2 billion naira. That's what Unity Bank says it will make or earn in the second quarter of 2012. May and Baker from the pharmaceutical section of the market also put out its second quarter earnings forecast for this year. According to May and Baker, it expects turnover of 1.9 billion naira, a profit before tax of 122.6 million naira, and a profit after tax of 83.4 million naira. That's what May and Baker says that their balance sheets will look like at the end of the second quarter. That's in terms of earnings at the end of the second quarter. We're expecting more earnings forecasts, of course, from many of the companies listed on the Nigerian Stock Exchange. And of course, here on Business Morning, we'll continue to present them as we get them. On that note, we'll come to the end of today's edition of Business Morning. Thank you so much for being a part of it. Channels News Track is at the top of the hour. I'm Esther Bodaga. Bye for now.